Welcome back to Alpha Recap, another market close rundown from stockalpha.ai. We recorded this after the bell, so we're talking about what happened today. As always, if you have questions, you can reach us at stockalpha.ai.
Nice to be here. The tape was one of those days where the headlines felt flat, but under the surface, a few pockets really moved. It was selective strength, not a broad rally.
Right, yeah. Markets closed up, but barely. SPY finished the day up about 0.1%, QQQ was up about 0.1%, and the small cap index, IWM, jumped roughly 1%. That divergence told the story.
So, what really stands out here is the small cap bounce. When the little guys outpaced the big tech leaders, it signaled a bit of risk-on appetite, even as headline benchmarks looked essentially flat. Exactly. Energy and some industrials were the clear leaders, with utilities and select real estate names also showing strength. Tech paused. Not a collapse, just a breath.
When you step back and look at this, energy's move had a few catalysts. Reports pointed to tighter supply and a fresh round of M&A chatter, which gave traders a reason to bid up producers and service names.
Right. And the other thing is that when energy looks tighter, it's a very concrete, fundamental story. Higher near-term pricing power for producers, plus M&A speculation, tends to re-rate companies with cash flow.
NVIDIA's announcement also added a different flavor to the tape. The company disclosed roughly $2 billion tied to optics for AI data centers. That sparked debate about where the real bottlenecks are in AI infrastructure, not just GPUs anymore.
Yeah, that tracks. That move reminded investors that networking, optics, and system integration are becoming big buckets of CapEx. It pushed some suppliers and system integrators higher, even though the mega-cap tech complex only eked out a small gain.
Honestly, I was a bit surprised by how targeted the market was. Poet Technologies, for example, popped on reported institutional buying. Small, thinly traded names moved materially on that kind of flow. Let's talk sectors. Energy was the clear outperformer. Utilities got a bid on the grid upgrade and solar deployment narratives, and select REITs showed leasing momentum. Industrials were mixed, but pockets of strength popped where backlog chatter sounded promising.
So, what really stands out here is the utilities story. Funds rotated into income plus growth names because grid spending gives both near-term activity for suppliers and long-term stability for utility owners.
Right, and on real estate. It wasn't a uniform surge, but there were clear winners where leasing and occupancy commentary improved. That's the kind of idiosyncratic move that keeps stock pickers busy.
On the macro front, nothing dramatic showed up to change the Fed story. The market remained sensitive to inflation, jobs, and services activity. Investors seem to price for a patient Fed rather than an aggressive pivot.
When you step back and look at this, a stable to slightly risk-on tape fits with a patient Fed. Small cap strength could be the market saying, we'll believe easing when we see it, not yet pricing in big rate cuts.
Right. And the other thing is pockets of supply tightness, like in AI optics, can influence CapEx and input costs for certain sectors without immediately changing headline inflation. But they matter for corporate margins and Fed messaging over time.
So, the risks were pretty clear. If inflation re-accelerated or economic prints disappointed, that small cap rally could easily give back gains. Geopolitical shocks to energy flows would also move the tape fast.
Short take reactions.
Quick reactions.
Not a broad sell-off at all.
Volume patterns reinforce the theme. Selective rotation rather than broad-based accumulation. Technically, SPY and QQQ looked like they were consolidating after recent runs, while IWM's relative strength mattered to momentum traders.
And from a fundamentals angle, the day gave investors concrete reasons to own certain groups. Energy on supply, utilities on infrastructure, REITs on leasing. That mix made the winners meaningful, not just momentum chasing.
A few individual notes before we wrap. NVIDIA's optics plan was roughly $2 billion and was read as a strategic move to shore up AI data center interconnects. Poet Technologies rose on institutional flows. Berkshire Hathaway reported a drop in operating earnings but didn't derail the tape.
Right. And a cluster of 8K filings kept liquidity rotating into names with fresh news. Those filings didn't move the market en masse, but they generated idiosyncratic trades, classic day trader fodder.
So, what really stands out here is that this kind of day often precedes a broader cyclical move if small cap strength lasts. Historically, sustained outperformance from small caps can mark the start of a rotation, but it needs follow-through and confirming macro prints.
Yeah, that tracks. For tomorrow, keep an eye on whether IWM extended gains. Any extra energy supply or M&A headlines would likely amplify that group, and earnings season commentary from AI suppliers could move the tech ecosystem.
Final takeaways. 1. Headline indices were basically flat while small caps rallied. That was the main story. 2. Energy and infrastructure narratives led with real fundamentals behind them. 3. Tech paused, but AI infrastructure news kept the long-term tailwind intact. And 4. Stock selection mattered. This was a day for picking winners, not index bets.
Right. If you're managing risk, consider trimming concentrated large cap positions if small cap strength proves durable. And be mindful of liquidity when trading smaller names that moved on news today.
Thanks for listening. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.